listen, why is this year a little harder? We're a much bigger firm. And so where anxiety comes for anybody, for any individual investor, for a household owner, a business owner, is when revenue is less than expense, right? Because then you're like, and you're starting to burn the furniture. And I think what happened in 21 for lots of companies, capital was cheap, almost free, a lot of big buildup on the forward, and you wake up and you're like, oh, I can't get capital. Access to capital's got more expensive. My costs are way too high. And so this has been a painful process of cutting costs, still wanting to invest. And I think that's not finished yet for our industry. I think a lot of people have big illiquid portfolios. You know, the liquidity to illiquidity balance got shifted. Yeah, I'll take a little of that. I'll take a little of that. Venture stuff, private equity stuff, strategic investment stuff. And so market goes up 30% and your liquid stuff goes up. Your liquid stuff, maybe it's, who knows? And so I think this is gonna be a challenging year as people need to rebuild liquidity and not stop investing in their business.
Matrixport, a crypto exchange and lending platform, said it has been bullish on digital assets since mid-December, but signals from the U.S. economy are now forcing it to be more cautious. Hello and welcome to Crypto Street. In today's video, Real Vision CEO Raoul interviewed Mike Novogratz to give us an update about his outlook for the economy in 2023 and the future for crypto.
So let's talk about the macro, because that was the thing that, I got surprised. I knew rates were going to go up and I knew there was going to be inflation, but that second leg that came after Russia kind of took everybody surprised and the central banks went further, so liquidity got really withdrawn. How are you seeing the macro now?
You know, I was out with one of the world's great traders of all time, right? Dave Tepper yesterday, and investors. And it's complicated, both of us. So we know a few things are happening, right? China's reopening, and we know what happens when you're reopening. There's a consumer surge, there's a travel surge, it's good to be alive surge. Right? Animal spirits come back. It's that complicated of a...
It is complicated, right? I'm like you, I'm kind of more of a deflationist, and I think over time it probably comes lower. But there's this other distinct probability that things come back too fast and we create inflation again. So I'm not sure how much rates come down. Sure, the 10-year can come down a bit in the meantime as growth comes down. But do rates come down a lot, or do they cut them down to 3 and then they get stuck? I don't know. How do you think balance of probabilities rates are next year?
Yeah, I think if they cut, they're not going to cut 25, right? They'll cut 50-50 and then see what happens. And so, the market's not that unfairly priced if you think 25-25, wait 5 months and cut 50-50. That would be the normal pattern. But there's a shot at 25-25 and they wait and they're like, well, until we really see inflation going below 3.5, let's just sit here.
But if they do that, so I've been talking about this with people because there's a lot of people think there's a second surge of inflation, and the Fed kind of think that. So we're going to stay. So therefore they're guaranteeing there's not going to be the second wave of inflation, and therefore 10-year yields collapse, which is very positive for the risk asset space that we all love.
Yeah, so that's, listen, there's this balance between, so Powell embarrassed himself by being so late to hike. And there was some strategy there. He wanted to get reelected, period. He wanted to get reelected because he thought he was the right man for the job. He didn't want Leo Brainerd in the job. He thought he was the guy to take the Fed through this hard times. And if that's a good strategy or not, that was a strategy. And so he definitely doesn't want to be seen as Arthur Burns, right? And so I think they're going to they're going to talk hawkish, and they're going to be hawkish. And they've been kind of bailed out by this tight labor market. Now they're going to get the global growth. And so they're softish landing it. Like in some ways they're doing a really good job. Stock market's at an okay price. Just intuitively, what makes me nervous, it's hard to think you had the greatest asset bubble in the history of the world, and then fueled, with the cherry on top by COVID, and 11 months of a bear market's all you get. Right? We're still above pre-COVID levels.
In a research report published early Friday, the firm said it is still not the time to be outright bearish, but suggested cutting exposure by 50% if Bitcoin BTC prices fall below $27,800. The largest cryptocurrency by market cap slumped overnight and was trading around $22,400 at publication time. U.S. stock markets have started to sell off again, and U.S. bond yields are moving higher, the note said. The 2-year Treasury now yields about 4.87%, above the November 2022 high of 4.8%, and the difference or spread between the 2-year and 10-year yields is at an unhealthy level of 0.87%. The rallying U.S. dollar is another negative sign and adds to the restrictive monetary policy overhang.
What people often miss is Bitcoin's way above. Like everyone says, oh, crypto sucks. I'm like, what are you guys talking about? Bitcoin has way outperformed all growth stocks during the, pre-COVID to now.
Oh yeah, by a long way, massively.
Listen, our industry needs a colonic.
Yeah. Hey, listen, I want to come into the industry for a second, but just the last question about this macro stuff. Does level of rates matter or rate of change? Because I'm not sure anybody gives a shit if rates stabilize at 4%. Because you kind of build in a hurdle rate, you know what your funding costs are, you figure it out, you lay off some stuff.
I think people aren't through that transition yet. Like your LIBOR plus 100 loan that you were making investments with, 1% is very different than 5% or 6%. And so I do think levels matter some. They don't matter as much as rate of change, but I do think they matter some. Literally since 2007, not a serious adult, non-professional, but like mom or dad, should have bought one scintilla of fixed income. Not one, right? You don't call your grandmother and say, hey, grandma, put your money in 30 years at 2%, right? And so this is the first time people are buying, say, hey, I can actually buy New York munis at 6% and or treasury bills at 4.5%, and so fixed income is becoming a real asset allocation to just normal, wealthy, not so wealthy, savers. And that's a shift, right? And so I don't think, unfortunately, growth comes back screaming, right? No. Like that was fueled by cheap money. That I think is just going to be a reality for a while. What would change that? Not a lot. You would have to literally see kind of a global catastrophe and, and the deflation tornado come back. But that's just so hard to see given the structural shifts that have happened.
So is it a good time to invest in crypto? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.